It's a hurricane. Right now it's kind of sunny, things are doing fine. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy Sandy or Andrew or something like that. And you better brace yourself.
Whoa! If that doesn't make your bowels watery, nothing will. You're gonna need a massive supply of adult diapers, maybe a case. Okay, so Jamie Dimon came out this week with a dire warning. It's a hurricane. There is a hurricane coming, and it is a very scary situation when someone as influential and knowledgeable as Jamie Dimon comes out and says this. Another titan of industry came out this week, Elon Musk, and said that he has a super bad feeling about what's about to happen in the economy and in the macro environment. This is all very concerning, but it really fits in with what we've been talking about on this channel for a very long time. All right, so I've said on past videos that really what's happening today is really unique in the sense that there have never been, at least in my memory or in my lifetime and most of the people watching this video's lifetime, there's never been a confluence of events that have happened simultaneously or have evolved together like this that is really happening right now. And it's really quite unbelievable. All right. You have the Fed tightening credit after an incredibly loose period of monetary policy where they were literally printing money, buying securities, pumping up the balance sheet to $9 trillion, and just flooding the stock market and the economy with liquidity. Simultaneously, you had the government irresponsibly involved in massive deficit spending. Joe Biden comes in, and after $6 trillion of unbelievable spending previous to him coming in, which some of which was justified because of COVID, he comes in when the economy's already expanding at a rapid rate and pumps in another $1.9 trillion right at the wrong time, creating an enormous supply-demand imbalance, okay? So right now you have the Fed realizing they're completely behind the curve and they have to do something, so they are raising interest rates, they're reducing their balance sheet, known as quantitative tightening, which we've talked about on this channel. And in addition to that, they are not printing $120 billion of money and buying securities and basically manipulating the bond market, right? So now you have true price discovery, which is developing in the bond market. You have interest rates going up. You have all the effects that brings in, and at the same time, they're draining liquidity out of the system, okay? This setup with the Fed, combined with all the other things I'm going to talk about, are literally, it's literally the worst setup I've ever seen for stocks in my lifetime, okay? And probably ever in the history of the stock market. The only time you've seen this quantitative tightening was in 2017, 2018, when Powell started to do this. He did it for approximately a year, and then Trump shut it down for political reasons, and he backed off, which proves a lot of what I've been saying on this channel for many months, that Powell is enormously political. He caves to political pressure, and this is one of the reasons why we're in the situation that we're in now. The second factor is we have enormous and out of control inflation, which is the direct result of the massive fiscal spending, deficit spending that we talked about, and the extremely lax and accommodative policies of the Fed, which went on way too long. So now we're all suffering with enormous inflation, right? The last print was 8.3%, but we all know that the actual inflation rate is much higher than that if we go to the store, if we fill up our tank, if we try to heat our house. We know that the inflation rate is closer to 15 to 20%. Okay? So that over time is going to create enormous demand destruction in the economy, and it's going to put massive pressure on corporate profits. And I don't think this, the full effect of this has really hit, even though you see Walmart and Target saying that it's affecting sales and it's affecting their margins. The full effect of this has not been realized, but within the next couple months, I believe you're going to be seeing the full effect start to manifest as these profit estimates continue to come down, and as you see this not only demand destruction on the sales side, but also margin destruction on the profitability side. Now, on top of all this, you have an enormous and unprecedented energy crisis. Okay, you have gas prices at all-time highs. You have oil consistently above $100 a barrel. And this not only is an enormous pressure toward increasing prices across the board, right? Because everything in our economy and the economy around the world is basically based on oil and gas. It's driving up the cost of everything throughout the entire economy. And nobody's doing anything about it because you have politicians, particularly the Joe Biden administration, who have declared from the very beginning a war on fossil fuels and have done everything they possibly can to inhibit the growth of energy production in the United States. And it has affected us tremendously, but there's also a similar effect around the entire world. Next, you have the geopolitical situation. The war in Ukraine has put further pressure on energy costs. Recently, the EU just announced that they're going to do a full phased-in embargo on Russian oil. That will put further pressure on oil prices. And there's really no end in sight on this. And with Russia pressing on with the war in Ukraine and the United States continuing to fund the Ukraine in terms of another $40 billion that are going to them for the war effort, the U.S. is, directly contributing to this war just going on and on and on. Now, we hear that Russia is able to sell their oil to India and China, circumventing basically these sanctions. So even though they're selling that oil at a discount, it's still essentially funding the war effort. So this could go on for a very long time. The next thing that I find very disturbing, and I don't see any end in sight, at least in the near term for this, is the domestic political situation. All right. I've mentioned previously, and I talked about this extensively, that the Joe Biden administration, when he first came in, he killed the XL pipeline, and he's done everything he possibly can do to reduce the production of domestic oil and gas in this country. And what this has done is it's driven up both the price of oil and gasoline. Now, gasoline, the price of gasoline is also dependent on the lack of refining capacity. So there are other factors that go into this. But the Biden administration has really done nothing to improve the situation. And incredibly, I sit there and just like cannot believe what I'm seeing. But Joe Biden yesterday says, well, there's basically nothing he can do about inflation or about gas prices. Okay, so he basically throws in the towel and he blames Putin, calls it the Putin gas hike, and all of this nonsense. Regardless of where you stand on the political spectrum, this has got to be the worst administration I've ever seen. I mean, in terms of they make every decision based on politics. Every single decision they make is a political decision. They make no practical decisions. Nothing is decided upon based on analysis and what needs to get done. And this is really horrible for the country, and it's really horrible for the economy. So I've been predicting for many months now, and I have to admit, or I have to observe, that I was ahead of the curve, because now a lot of people are talking about it. But when I started talking about it 6 months ago, I went back and looked, nobody was talking about a recession, okay? But now I believe a recession is inevitable. Okay, so you have all these factors conspiring together to create one of the most toxic situations you can possibly imagine. And this is what Jamie Dimon was talking about when he says it's a hurricane, okay? And I say it's a tsunami. I also say it's an atomic bomb. Whatever you want to say, it's just horrible for the economy, and the setup is very, very negative for stocks and for investments in general. And you're seeing it across the board in stocks, real estate, crypto. Forget about crypto, okay? Crypto was invented in a period of excessive money printing and excessively accommodative Fed policy. It is a pure speculation, and you can see how rapidly the air is coming out of that market, because it is a purely speculative asset class. It depends on the next guy paying more than you. There's no intrinsic value in Bitcoin. Terra USD recently blew up, and you see the fallacious nature of these stable coins, purely a Ponzi scheme. $85 billion were lost in that Ponzi scheme in like a matter of days. I mean, if this doesn't give people cause for concern or pause them in their excitement for Bitcoin and its ilk, nothing will, okay? Trust me on this one. It's not just because I'm older, and it's not just because Warren Buffett and Charlie Munger are in their 90s, and you think that just because they're old, they don't understand it. They understand it. Trust me. They understand it. And so that's just a word of caution. I know you're probably not going to believe me if you're very interested in crypto, but time will tell on that one, okay? But the bottom line is, what do we do as investors here with all these storm clouds and this hurricane coming directly for us? It could be a direct hit. We're sitting there alone on a tropical island in a lean-to, and this hurricane is barreling toward us. What do we do to protect ourselves? Okay? There's a couple things we can do. First of all, I've said for a long time, at least 6 months, the best way to protect yourself is to build your cash position in your portfolio. Okay? This does two things. It provides you with dry powder to come back into the market at a later point in time. And it also reduces your portfolio's volatility, okay? People say cash is trash. That's complete BS, because even though, yes, in real terms, you're going to lose the value of how much inflation is going up, I'd rather do that than lose 25-30% in growth stocks, all right? So use these bear market rallies, which in some cases can be quite extensive, to sell your losers and raise cash so that you can be more liquid and live to fight another day. Second of all, I've suggested on this channel, if you're a long-term investor, look at the mega cap tech stocks. I just recently did a video recommending that you buy Alphabet before the 20-for-1 stock split. So I'll put that in the description, and I'll also put it up here at the end of the video so you can take a look at it. Highly recommend doing that, again, if you're a long-term investor. I've also recommended high-quality dividend stocks. I've done a number of videos on this channel related to that, so I will refer you to those. Take a look at some of the playlists, and you can find those on the channel and take a look at them. Secondly, we've been very big on this channel with respect to energy stocks. I recommended Exxon and Chevron way back, the height of the pandemic. and I continue to recommend them. They basically tripled since I started recommending them in 2020. Year to date, Exxon's up like 58%. I'm still very bullish on energy, and until the geopolitical situation and or the economy crashes or whatever, as situation changes, I will update on this channel to let you know when I am no longer bullish or when I am trimming my enormous allocation to energy stocks, which have done incredibly well. Finally, I've recommended the commodity ETFs. You can also invest in commodity stocks directly if you want to do that research, but the commodity ETFs, which I've recommended, are largely focused on the industrial metals. Okay, so there's no sure way to protect yourself in stocks. I don't recommend that you completely get out of the stock market, because as a long-term investor, I always want to have some exposure, and sometimes you just have to ride out. If you're in the right names, you just want to ride out these downturns, but this one is going to be a doozy. And again, I would use any bear market rally here, because we are in a bear market, to increase your cash position and sell your losers and get out of any companies that do not have a very long history of profit and cash flow growth. All right, so that's what I have to say today. Listen to Jamie Dimon, listen to Elon Musk. These guys are very smart, and they're talking about something that is real. We have never seen a situation like this, but we'll get through it somehow. Never short the U.S. economy. It's the most resilient and the deepest economy in the world. We will come through this, and we will be better and stronger when we come out the other side. All right, so thank you for watching. I hope you got some value out of this. If you did, please like and subscribe. And I'd love to have you on board for the next video, where we talk about the markets, we talk about economics, and we talk about specific stock recommendations and investment recommendations on this channel. So be sure to subscribe so you can be on board for future presentations, which will be coming your way very soon.